Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 20th of May. Starting on with Escape Hunt, where we're trading in the aftermath of yesterday's bear trap from below the 50-day moving average at 37 pence, while we're above that looking for not only a retest of last month's resistance around the 50 pence mark, but up towards 57, 58 pence. Soon as at the end of next month, stop loss, I suppose, at the moment back below yesterday's bear trap low at 33 pence. Only below that, really suggesting that the uptrend, which has been in place since October, has finally come to an end. On to Guild Esports, a company which I interviewed a few days back, and some constructive price action here. The old peak there from February around 7 pence, that's becoming new support. The longer that continues to be the case, the greater the chance of an eventual push through 8 pence, and then hitting the top of the broadening triangle from back in October as high as 11 pence. Time frame on 11 pence perhaps by the end of next month, although that might be a little bit too speedy given the current configuration on the daily chart. Only back below the 50-day moving average at 6.16, really questioning the ongoing recovery for the shares. Stock which has been, well, it's not for widows and orphans #1, but also has been rather spiky in the recent past, is Iconic Labs. Here, though, it looks as though things continue to be constructive. We've had the sustained push through the 200-day moving average since the beginning of this month. That's around the 0.011 level, and while we're above the 200-day line, looking for potentially a best-case scenario target as high as 0.35, and that might be seen over the next couple of months, maybe going into July. If you're cautious on the shares, which obviously some people might be, then you'd wait for a break of that line there from September last year, around 0.19 pence, and that would be the momentum trigger for further possible gains. Requested stock is next, and here we've got Cannabis. Here the situation is that we've got this, I suppose, consolidation between that low there at 17 pence in March and the upper 20s, which was the March-April peak. At least if you're a range trader, then that would be an opportunity to buy against that 17 pence level. There is a line of resistance from last month running through 23 pence, so that's probably the upside for now while we hold above 17 pence for those who feel like trying to get involved in this situation. But it looks as though there may be further extended consolidation, more than the 2 or 3 months that we've already seen there. Good stock in terms of the trend that's evident on the daily chart is Nsci. Here we've got a situation on Net Scientific, more properly. Here we've got a rising trend channel which has been in place since October. Top of the channel heading towards 85 pence. Floor of the channel at the 50-day moving average, just shy of 51 pence. And at least while we're above 51 pence, we're looking for a possible continuation of the recovery here. If you are cautious, though, you want to see an end-of-day close back above the 60 pence level, which was resistance at the end of last month, and also the resistance that we've seen so far today. But above 50, looking for a push towards 80 or 90 over the next 2 to 3 months on Net Scientific. Very popular stock, which people are sort of willing higher at the moment, is N4 Pharma. We've had a long consolidation here towards the, I suppose that's the 8p area. We've got the advantage of a rising 200-day line around 8.3 pence, just level with the 50-day line as well, so that's a sort of positive scenario. We failed a few times towards 10 pence, and that might still be the case, so therefore one might want to wait for an end of day or a weekly close through 10 pence to then target the top of the wide rising trend channel from the, well, basically this time last year, as high as 16 pence. But 2 to 3 months, I think, is the time frame on 16 pence being hit for those, especially for those who don't want to wait for a break of the 9.5 to 10 pence resistance zone that we have at the moment. Another stock which seems to be trying to get its act together at the moment is Shield Therapeutics. We've got a rising trend channel based at 49 pence. That's been in place since January. Top of the channel there at 100 pence, which obviously seems like a long way away. But if we can get a weekly close through 60 pence, which is post-January resistance, then that might come into view over the next 2 to 3 months. Any dips currently towards the 50 pence area probably regarded as a potential technical buying opportunity. Just a few stocks to go now. The first one is it's a rather fun situation in the sense that the bears have been trying to knock it for several days, especially on this move that we've had through 15 pence, which was the major resistance area for the shares. They then doubled after that, but quite good actually in the wake of yesterday's price action. The share's too strong to hit that 20-day moving average, which is normally a very good sign. If you are cautious and you still believe in the bears, then maybe you'd wait for an end-of-day close above 25 pence to then open up the best-case scenario target at 40 pence by the end of next month. But at least while we're above the 17 pence zone, Tern looks like a buy on dips rather than a sell into strength. Just covering Zoetic again, quite a lot of controversy around this situation. Interesting, I suppose, that we've got, let's say, a last chance saloon dip or dip opportunity, buy the dip opportunity for the shares. There's a line of support there from January, and as we're very, very close to the 200-day line, one could say that any dips towards that line in yesterday's low at 51 pence, that's the line in the sand for the bull argument at the moment. An end-of-day close back below the 50 pence zone probably suggests that the shares are going to go much lower, maybe down towards the 40 pence area to fill that gap from November, but otherwise there is a chance of a rebound, even a sort of dead cat bounce rebound into the mid to low 60s over the next few weeks, or a couple of weeks at least, while we hold yesterday's low, so maybe worth watching that. The other point to note is that we had a lower low for May to date, but the RSI didn't go low, so there is a bit of bullish divergence there, which may be, again, for technical traders, something to savour. Finishing off with one of the more reliable plays in the small cap area, Zephyr Energy. I've covered this a few times, largely because there aren't too many solid situations to cover at the moment. Here we've had a decent bear trap rebound from below the 50-day moving average at 2.72 pence and the floor of the rising trend channel from September. The view now is that while there's no end-of-day close back below 2.5 pence, we're looking for 4.5 pence as soon as the end of next month. That's it for me today. More updates tomorrow.